Okay, mock test 5, part 2, question number 34. It's a third premium exam, like the 3 premium mocks. So you have to calculate FCFF, projected FCFF for some company called as Azulant whatever in the upcoming year. So you have to do FCFF 1. Okay, I'll pause the recording, copy the data. Till the time you try to recollect what was the formula for FCFF. Okay, copy that formula. Write that formula in your notebook till the time I copy this data. So sales 4,600. ये था ना company Azulant. So sales 4,600 million for the most recent year. And using the forecast in the exhibit 1, sales growth, EBIT margin, incremental capex, incremental working capital investment, and proportion of that incremental fixing investment and working capital investment taken by the loan. And then niche, you have been given the tax rate of 25%. All 3 companies have a tax rate of 25%. Okay, go for it. I'll pause the recording. Okay, I don't recollect that formula of EBIT. So what I remember is this formula. The net income plus depreciation matlab plus NCC non-cash charges minus WCI minus FCI or minus capex, and because it is FCFF था ना, free cash flow to firm पूछा था, FCFF पूछा था. So after net income plus depreciation minus WCI minus fixed capital investment plus interest into 1 minus tax rate. That's the formula I think we will be able to recollect. If you can recollect the other formula also great, but I can work with this formula. Okay, I can work with this formula. So it is possible for you to work with this formula even though the net income was not there. Okay, so I think जो लोग कर रहे थे, जो right track पे थे, I'm happy that you understood that the sales were for the recent year and the question was to calculate FCFF for the upcoming year. So you required sales for the next year and hence you added 12% to that. So 4600 plus 12%. That's what I was asking Agnel ki hai kya? Agnel was not telling me it's the next year sales. Okay, so this is the sales of next year 5152. जिसका 15% is the EBIT margin. So I'll get an EBIT 773. Now I'll assume some interest, and that assumption of interest would be basically assume interest of 0. So you get a PBT of 773. I have to assume some interest, so it's better to assume it's 0 interest. So you get a PBT of 773. Uska tax is 25%. The net income would be 75%. So you get a 773, subtract 0 interest, you get a PBT, subtract 25% tax, you get a net income of 579, 580. पूरा तुमने कुछ अलग लिखा था तब. Net income for the next year is 580. Okay, now I guess you guys can go ahead and do it. I'll again pause the recording. Okay, so you got it, no? Arjun and Siddhi got the answer as 414, 415, whatever. Let's check. So I had assumed interest to be 0. So that makes it easy. Last term would be like 0. 0 into 1 minus tax, is that going to be 0? So I need depreciation. So nothing is given, I guess. So we'll assume 0 depreciation. I don't see anything being given over there. But अगर नहीं दिया है ना, तो हमने क्या किया था कि इस डेप्रिसिएशन को वो FCI के साथ डाला था, नेट कैपेक्स करके बोला था. So what we did is we did minus WCI and then ये जो है इसके साथ combine किया. We put it like this, minus FCI minus D. Okay, so this plus D went inside and became minus, and this is called as net capex. So sometimes they will not give depreciation, but they will mention like net capex, which is called as FCI minus depreciation. Okay, coming to the WCI, working capital investment. ग्रुप पे लिख नहीं बेटा, तो ये लोग कैसे ज्वाइन हो गए? इनकी ग्रुप पे भेजो. So sorry. Okay. इनके लिए क्वेश्चन था एक्चुअली. फाइन, चलेगा, तुम लोग के लिए भी था. Okay, incremental working capital expenditure मतलब working capital investment. So as a proportion of sales increase, So this is what you were doing, I guess, 4600 to 5152, whatever. So the sales of the last year was 4600, and they're going to increase at a rate of 12 percentage. So 4600 into 12 percentage, that's the sales growth rate. The sales have increased by 552, and us 552 ka 10 percentage is the working capital investment. So into 10 percentage, that's like 55. Working capital investment is 55. That's 55 over here. Let's go over to capex now. So incremental fixed capital expenditure as a proportion of sales increase. So saying again is 552. So 552 or that 4600 ka 12 percentage. 552 is the sales increase and uska 20 percentage is the fixed capital investment. 110 incremental fixed capital investment. Okay, so depreciation nothing is given, so assume to be like 0. And interest we assume to be 0. That's it. So that was the answer. 580 minus 55 minus 110. 580 minus 55 minus 110. Okay, ये फंसाने के लिए दिया था. This is required for FCFE and not for FCFF. When you calculate that net loan, लास्ट का जो टर्म है FCFF का जो नेट लोन है उसके लिए रिक्वायर्ड था कि 40% of investment in fixed capital, which was 55 and 110 working capital and fixed capital, so total investment is 165. तो ये 165 का 40% is taken as a loan. Okay, so incremental fixed capital investment and working capital investment 110 and 55, which is together 165 ka 40% would be loan. So this is required for the FCFE and not for FCFE. So 66 was not required for this calculation. So answer, I agree with you guys. My answer is also matching 415, 414. Check the answer. Good. Answer was B, 414. It was an easy question. Genuinely, it was an easy question.